record this on this computer. Good, 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 good. All right, perfect. Move this up here. All right. You guys see the screen, everything good. So trading starts with each trade, okay? We start trade by trade, day by day, week by week, month by month, and then year by year, okay? So if we understand these things, it's kind of like, you know, putting it all together, we can see how the small things make up the big things, right? It's the little things that add up that puts us in a position where we can profit. Give me 1 second, guys. I got somebody ringing off on the phone. Hold on 1 second. All right, I'm back. So again, little things make up the big things. All right. So we all talked about quality versus quantity and not having a whole bunch of trades, but we still want to understand the terrain. We want to understand, you know, today I block out what happened yesterday. Whatever losses I had, whatever winners I had, I blocked it out, and I'm just going to trade for today and focus on today. And we're patient and waiting for our opportunities. We take what the market gives us, okay? So since it's Friday, we obviously know that we don't have that much time for these trades to grow legs and for us to get in and have them hit our profit target. One of the things that I do for you guys, if you notice, in the signals I give out, I always give you what? The time frame. You guys notice that? I also try to give you the entry. Type a Y if you guys have noticed that. Excellent. Now, I do this because it's easier for you guys to learn, okay? It's also easiest for you to go to the time frame and understand exactly what it is that we're doing with any given trade, any given, you know, opportunity. We were in the euro pound, right? A lot of us were in the euro pound. That's kind of why I wanted to talk about the euro pound right now, okay? I already talked about some areas of significance as far as our stop loss is concerned. Now, with price being a little bit parabolic, not a lot, but a little bit, it's extended. You got 5 or so candles that have moved up to the upside. You expect it to turn around and give you a pullback much like this. That pullback could probably end up about right there or right here. Either way, if you were in that trade and your stop loss is still at break even, you'd have nothing to worry about. With us moving our stop loss to break even, a pullback could probably really take and wipe out all of our gains as it pertains to where we are right now. So with there only being about 1 hour and 55 minutes left in today's trading day, and the possibility of the market gapping down back to the 92.50 level, or even the 92 cent level, you definitely want to take a step back and say, all right, how can I secure my profits? Okay? How can I make sure that I secure something on this trade to make sure I am not, I guess, still in the market and possibly in a position where my stop loss won't even work because if there's a gap, so to speak. In this scenario, we do a bar by bar trail, okay? So bar by bar trail would involve moving your stop loss to just below the previous candle's low. That would be around 92.64. I think I had said 92.63, actually, to give it a little bit of room, or the level I gave on the signal, okay? But do you guys see that there? Give me a 1 if you follow me here. Bar by bar trail is perfect in situations when you don't have much time left, but it's also good when you're parabolic like you were here. Price was moving up and up and up, and if you had used it bar by bar, you'd have been able to take your stop, move it here, and when price came down, you'd have been stopped out had you gotten in down there. Bar by bar trail works perfect in those scenarios. Now here, this is not that parabolic, okay? But we don't have much time before the market closes, okay? So we definitely want to keep that in mind. Now, what are some of the things that I guess caused us to look at this trade and choose this trade? Well, let's dig in. Besides trend and the higher time frames location at the time, which I'll reserve for a mastermind session, I will show you this. This is what sparked my attention. Initially, it was this little bid block. The tailcoat flip, as far as I hate that term, but you guys use it from other groups. But it's a flip when resistance becomes support, right? You can kind of see that there. This was resistance. Now it's a floor, right? And then you have this bullish engulfing pattern. And when you start to get signs, a little more bottoming tails, right? These little signs, look at all these bullish engulfings before it exploded up, right? You could even draw a trend line if you wanted to. I know I did. I drew a trend line right here initially. All these things look really, 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 really good in our favor, okay? So these are some of the reasons why we were into that trade. We liked that trade. Give me a 7 if you follow me. Because it's not just about giving you signals, okay? Not just about giving you signals, all right? Good. I want you guys to know why some of these signals are given out, okay? Now, obviously, I talk about in-depth detail, multiple time frame analysis and things to look for, but we live and die by our certain patterns, right? I'm not going to go too deep into the patterns right now because I definitely want to reserve some of the juice and the sauce for those that are subscribed, okay? But there's a method to the madness. We're not using any indicator to tell us when to get in or when to get out, although I do have indicators that help you to be able to focus on where to focus your attention, right? But I'm going to take this time to talk about some trades that you guys may have that are drowning. They're drowning. They're drowning, right? What trades are you in that are underwater that you can't get rid of? Let's call them dog trades, right? Trades where you are just hoping that thing's going to turn around, right? Or potential trades that you may be looking at. Trades and setups that you may have been trying to call out yourself that you want me to take a look at, okay? I want to make this about you guys, all right? What questions have you had about the market, about the signals, about your trades, about trading in general that have not been answered, right? It's Friday, okay? I want to make this a good, week. We end with a bang. So let's touch on anything that we haven't touched on. It's your chance to ask me anything, right? As it pertains to this good old thing called trading, okay? Or you guide me to where you want me to go. Yeah, I analyze every market bottom up. Now, again, this is my strategy. That means if you see anybody else implementing it, you know exactly where it came from, okay? And I do this from a bottom-up perspective to be a lot faster and efficient. As a matter of fact, let's talk about how I trade. Would you guys like to make this a little bit about how I trade and how I approach the market? All right? All right, good. Let's do this. I'm gonna give you hypotheticals too, all right? You're in the back of the Uber, right? A little bumpy ride. You got about maybe 15 minutes before you get to your destination. Instead of being on Instagram, right? Instead of being on Instagram, and I will explain bottom up, Mo. Don't worry about it. I got you, Moab, my Moabite. So Instead of going on Instagram, Facebook, looking at cute little pictures, right, or selfies, I am looking at my entry time frame. Okay? Now follow me. My entry time frame is my 4 hour. If I don't find anything on the 4 hour, I'll go to the 1 hour. Okay? Yeah, this is recorded. Okay? I go to my entry time frame and I look at it like it's Facebook. I look at it like it's Instagram. Right? And I'm looking for my significant levels. Okay? My confidence levels based on bid blocks and avenues. I don't care about what the trend's doing at that given time. I just want to know where these lines are. So what happens is I'm now creating lines of demarcation. It's almost like setting laser traps, right? Or movement sensors. So as soon as the market moves and hits a significant level, I know. I also know when the market picks up from when it's been quiet, right? Give me a 1 if you follow me so far before I move on. Now, this is done at any time. It must be very, very closely noted that this is done at any time, okay? Now, from there, I then move on to alerts that triggered, okay? Keep that in mind. My main focus after that is alerts that triggered. Now, inside my course, inside my mastermind sessions, I will show you which apps and which software to use to be able to go in and set these alerts and what times to be there, to be notified, to be able to take the trade. But for the most part, when I'm speaking on randomness, I'll look at the market at any random time. I could be at a doctor's office waiting to go in to see the doctor, and I'll be looking at my entry time frame, setting my alerts based on my levels of confidence. I could be talking with my friends, and as they're talking and chatting, I'm looking at the chart, just setting alerts. It only takes a quick second to set the alerts. I showed you guys the other day how impactful it is to set the alerts when you do your analysis. Now, from there, when an alert triggers, I go look at it and I focus on it, and that can happen at any time. Next, I then focus on alerts that have triggered at specific times that I'm going to reserve to tell you, because I'm going to reserve it for my mastermind students. I'm going to reserve that sauce for those that are subscribed, all right? But at certain times, I'm there at the right time. It's the perfect time, okay, for me to be able to look at the alerts that triggered first. When I'm looking at the alerts that triggered first, that's my main priority because I can see if the trade's still good or if it's been invalidated. From there, I then go to a momentum indicator, preferably mine. If you don't use mine, you can use anyone. Mine's is free, by the way. But you definitely have to subscribe and tune in for me to show you how to use it. But I go to a momentum indicator, and that momentum indicator then tells me where I should focus my attention to start new analysis on new pairs. And when I'm looking at the chart, when I finally go to the chart to look at my opportunity, that's why I do a bottom up. Give me a 7 if you follow me. Everything starts with the trade and the opportunity. I don't even need to do any analysis until I have an opportunity that is ready and present for me to take because the market changes. Okay, your analysis that you did today is not going to be the same tomorrow. The analysis you did this week is not going to be the same next week. So I've learned over the years, it's a waste of time doing analysis when I have to do it what? I got to do it again before I place the trade anyways. So I stopped doing it before the market gets to that specific level. Now, a lot of people would say, well, don't you want to do analysis and only set trades and alerts that are in line with analysis? No, because I want to know that the market's moving. Even if a level is no good because it's not in line with my bias and my higher time frame analysis, I can still know the market moved and has possibly created another bid block or another ask avenue when it moved away from a certain area with significance and momentum. Okay? Anybody lost in the sauce? Now, if you're completely, confused, I get it. If you maybe want the in-depth details as to how to, go through it, just know that you're not going to get it on this free call. We do go in depth in the mastermind sessions, but do you guys get that? Give me a 1 if you can kind of follow that and grasp the steps that I'm going through and how it leads with that bottom. It ends with that bottom up. We start with the bottom up, but before I even get to a chart, there's a series of steps that I'm taking that leads me up to that point where I even place the order. Now, a lot of you guys, you want to trade, and I give you these signals, and some of them are limit orders. Realistically, with limit orders, do you really have to set the order if you can set an alert instead and then place the trade when it gets pretty close to the level after everything still checks out and the reason you want to take the trade is still present? Right, Jesse? No, you don't have to. So honestly, really, why would you do anything else? So then I get people that ask me, is the limit order still valid? I mean, kind of really, it never was valid in the first place. Because the true risk management, the true low risk, high odds option is to set an alert on it and then go back to it at that time so that you don't miss the opportunity if it's still present. Give me a 7 if you follow me. But you guys rather just get stopped out all the time, right? There's a reason why I and the rest of the team rarely get stopped out. It's one of the reasons why I decided to sell signals. I was like, wait a minute, you guys actually pay for signals that don't work? Well, hell, I'll charge for signals that do work. And then I'll show them because they'll make money. A lot of the people that are in my alert traders group, they made a lot of money this week. And a lot of them made withdrawals. Let's give them some hand claps and a round of applause. Right? You guys in the chat, give them a hats off. Because these are new traders. People just like you that were in other groups, not making money or probably weren't even really trading more than a month ago. Right? You too can be in this position. Right? I have traders that have been with me for a couple of months now. And since they've been tapped in, they've been slowly building their account. They've been able to see what consistency looks like. Okay? Now, I'm not going to name any other names to give any credit for anybody and let this session be just about us. But there are other mentors out there having to apologize for their bad trades. You shouldn't have to apologize for bad trades as a mentor and an expert. Just explain why the trade went wrong. Right? Explain some of the things that could have caused the trade to go wrong. Right? Right? Now, if there are none because you had perfect execution, then it should just be a can't win them all. That's what a true champion is, what a true professional trader is. Hey, he has losses sometimes because he can't win them all. But if he's losing more than he's winning, and his Sharpe ratio and his risk to reward ratio is not on point, you don't make money. You guys follow me? Give me a 1 if you follow that. It's a waste of your time. You're spinning your wheels. If you're going back and forth, taking a whole bunch of trades with a low batting average and you don't have the right reward to risk ratio, you're just wasting your time. You're not going to make any money. Okay? You can even have a series of winning trades. But remember the swing in trading. If I lose 50% of my trading account on a bad losing streak, how much of my account do I have to make back in order just to get to break even? Come on now, for my mathematicians. If I lose, let's say I have a $500 account and I'm taking these trades from UTH and YTF and all these other groups, and I lose 250, which means I lose 50% of my account. How much do I have to make back in order for me to get back to 500? You have to make 100%. 100%. And that's not even really realistic. It's not realistic for a lot of trading, for a lot of traders, especially new traders, right? You basically have to pretty much double your account just to get back to where your deposit was. So that's why capital preservation is very, very important. You keep taking losing trades, then you are creating and digging a hole for yourself so that when you do make profit, it don't mean nothing because you're still negative. You're still underwater. Give me a 7 if you follow me. You're still coming back from consecutive losses, especially if you are going from 1-to-1s, right? Now, on this euro pound trade, did I not give you a method that you can use every single time to secure profits after the trade's moved in your favor? I gave you how to use the trailing stop, but I'm also giving you what? Bar by bar. There is no artificial dependency where I'm saying it's time to move the stop loss, or implement the trailing stop, or close the trade because we're up 10 pips and it's just random. No. This is something that you can use and it's repeatable because these are techniques. Everything should be a technique that you can actually go to and Google it. And if it's not, it should be something that works for you. If it's not a true technique in this market, then a true professional that is back-tested it over time and making profit and withdrawing with that strategy that is giving it to you, right? That strategy should be working for you. And if it's not working for you, then why are you using it, right? If it's not something that's an industry standard as far as that technique, and a person made it up, right? If a person just went out and just randomly made that up, then it must at least work and be consistent. And it can't just work for them. It has to work for you, right? Do you guys follow me? Give me a 1 if you follow me. This is for a lot of those out there that are new to my groups, new to what I'm doing, right? You just came in here and you're over there looking at these other groups and you're trying to figure out why is it not working, but you see the mentor is kicking ass. You see the educators kicking ass. That person in your upline's kicking ass, right? But you're not. What does that mean? That means you should kick that strategy. Can it? If it doesn't work for you, then don't use it. Now let's go to industry standard techniques, right? Such as moving average trail, bar by bar trail, pivot to pivot trail, right? Trailing stop trail based on stop size, or trailing average true range. All these techniques are industry standard techniques. Not all of them are going to work for you, and not all of them are going to work at every given time in the market. There's certain situations where certain ones work the best in certain times. Okay? Now, it's up to you to learn each of these and to learn why they're used and when they're used, and stop going off of just because someone says. And if it's just because someone says and it does not work for you, then scrap it. Scrap it, right? Scrap it. So let's talk about multiple time frame analysis a bit. All right, once we went in, we found an opportunity, right? And we want to be long. What kind of trend should we look for if we want to be long? Uptrend, right? What about if it's range bound? Where should you be in the range if you want to be long? Support, the floor, the bottom. Excellent. So one of the things that I like to do outside of trend, okay, is I like to look at other factors and dig a little bit deeper on my weekly time frame. Again, I'm going to reserve some of those tools, resources, and hidden gems for my mastermind students. But it's not just the trend that you're looking at on the weekly time frame, okay? If you look here, this is not necessarily an uptrend, but you can see that the momentum has pretty much pushed higher. This candle is really, really bullish. There was a lot of momentum. So you would expect it to continue higher, especially since we went past this significant area of resistance there. Okay? Yeah, right there. Now, going to the daily, you can see the trend was up and we were respecting the 8-period moving average, as well as we had a nice bottoming tail, right? If you look back to the left of the chart, there's also nothing in your way. It's kind of clear skies ahead. We had really no resistance in our way. Other professionals looking at the same thing, right? You also have the fundamentals to suggest that we are bullish. The only thing is, did this trade happen overnight? How long ago did I call out this euro pound trade? Excellent, right? And the trade worked in our favor, right? But did it work out immediately? Did it work out immediately? Nope, right? So patience is a virtue, okay? As a swing trader, we take our trades, we wait for them to form, and then we wait for them to materialize. And in between, we have nothing. I'll give you a great hypothetical about being patient and waiting for your setups. If I told you that we're only trading euro pound, and we're only focusing on the pullbacks because we're only buying because it's in an uptrend, is there anything to do right now on it? No, right? What will we have to wait to do, my master trader in the making, Jesse? And you should be so proud of yourself, Jesse. Jesse's been the main one tapped in. He made a choice a couple of months ago to just stop playing around with the charlatans and the recruiters, and he came to a professional master trader, and he literally has been turning his trading around. And Jesse made, I think, a couple $1,000s this month in his trading. I've been mentoring Jesse, one-on-one, okay? I've also given him access to every one of my resources, and he's been utilizing the hell out of them. So he really deserves a round of applause, okay? Jesse's been tapping in, and he's made himself, to the point where now he's admin in some of the groups because he's really been helping out you guys a lot, and he'll be a trader for life. I can guarantee that. I can guarantee that because he's been hit with the bug. He knows too much now, and he's too good now, right? Too good to ever let go. You know what I mean? So it's only up from here, right? It's only up from here. But why? Because we don't focus on recruiting calls and prospect calls. It's trade calls. All we do is focus on trading. And there may be a little noise here and there because we have some haters and trolls, and then we have some people that come in and want to, express their love and affection for, other charlatans. Some of them are still hooked and attached to IML because they're making money off it. That's fine. We already talked about, where we feel about it, and there's more power to you, okay? If that's how you make your money, that's fine. We're not against it, right? But we focus on trading. And if you really, truly focus on trading, there's no limit to how much you can make off a real small amount of money, right? Makes sense? Give me a 1 if you follow me. So let Jesse, let Sebastian, right? Even, my guys like Jay and Rayshawn, these guys inside the group, they're doing really, 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 really well, right? Shalandra's doing really, really good. She made like 1,600 this week, and we drew almost all of it, right? Why? Because I focus on withdrawals, right? For those of you guys that aren't ranked too high or are under, platinum 600, if you go in and trade effectively, it really doesn't matter because you're making enough money, right? Good job, TH. TH just joined. He's having great results. I'd like to give a special shout out to Javon. He's been doing it very well. Horace is a new one. He's came in and just been killing it, right? I mean, I'm very, very, very proud of you guys, man. I mean, It's not just about my success. It's if you know, I win, the whole team wins, right? It's different when you know, are going in and, you know, recruiting and you bust out, you know, a rank, right? That's successful, yes, if it's your goal, but it's not something that you can really teach to somebody and to have somebody truly repeat, right? It's a lot of work that goes into that. Trading is really a skill that you can monetize that they can never, ever take from you. It's why a lot of you guys signed up. So don't lose sight of that focus. Even if you're ranking up left and right, you should still be in a position where you want to master the skill because it's going to help you rank up even more. That's why I mean, cap and just cap on, not cap, but cap on and just go at, you know, all the ones that say, you know, why do you want to trade, right? Or they laugh at those that want to master trading. When they tell you don't focus on trading, you know, go focus on it later, that doesn't make any sense when your whole product and everything you're doing is centered around trading. You can't have integrity if you're going to sit here and say, don't focus on trading, don't worry about the trading, after you just got somebody to sign up and pay $225. Or you're expecting to have people in the future get up and sign up, right? And have them pay $225. You're going to have to do some major capping and be really good at capping, or get embarrassed and have a whole bunch of rejection and have to overcome a whole bunch of, oh, you're a scammer and you're scamming. There's no scamming in Forex with the exception of brokers that are scammers, right? And I'm not saying that IML is a scam. It's not. And MLM is not a scam. Network marketing is not a scam. But the way that people are going about building their network, their company and their brand is very sus. And it's at your expense. You know what it reminds me of? The Fed, US government and taxes. Everything's at your expense. The little guy ends up footing the bill, right? So I want you guys to just kind of be aware of this and stop being brainwashed. I'm not telling you that you have to completely scrap IML. You don't have to. If you choose to, that's your choice. But I'm giving you an environment where you can live with both, because you can make enough money to pay the fee to where it's really nothing. And if you're not using the resources, just pay the $17. Who cares? And do it moving. But there's a whole bunch of people, right, that will be depending on you when you rank up. And if you don't take this market serious, then you're going to have a black eye on your name, regardless of whether they're successful or not, because their success won't be because of you. And they're not going to find the additional and the extra resources that they need inside of IML. IML is basic training. After about 30 days, if you take this very serious, you will outgrow the training and the resources that they have. And you're going to be hungry for more. And that's where you start to go out and try to gain more knowledge and resources to further your knowledge, to better yourself as a trader, right? To build the skill and learn the craft. Now, for those that don't care about that and are only trying to focus on, just recruiting, it isn't right, because you're going to have customers that do care about trading. And there's a certain point where they're going to need that extra push. And if they're trying to study the market to better themselves, then you should as well. If you want to rank up, it's your job to learn your products. And that's in any business. Give me a one if you guys follow me. In any business that you're in, it's your job to learn your industry and to learn your products. So those that are talking about not learning the market or not trading are lazy. Those that have ranked up and aren't a super, super duper motivational speaker and on some David Diamante-ish, where they're just really able to motivate you and get you going and give you a blueprint to truly level up and recruit, then they need to really open up the charts and start digging in. Open up Baby Pips and go into IML TV and really, really learn. And that's you if you're ranking up, if you're leveling up. or if you're holding on to IML and you're expecting to be able to grow your network, take responsibility. Otherwise, your brand will suffer. Okay? And I'm not talking about IML's brand. IML's brand is doing fine. They still are succeeding even though there's bad press, because every successful company, every big company has 33% that love you, 33% that hate you, and 33% that just don't care. It's the company's job to get the 33% that don't care to care and become a customer and eventually love you. And that's how business works. When you become big enough, you just don't focus on those that don't care, and I'm sorry, those that don't love you, and it may speak negative, right? The company still succeeds and thrives, but you as an individual, you're going in your own backyard. You're at home or at your schools and your jobs, places where you frequent. And if you don't take care of your downline and your customers, it will come back to bite you in the you-know-what, regardless of what happens to IML, in a successful way or the other way, either way, no matter where it goes, whether everyone's ranking up and leveling up, you personally got to not only look in the mirror, but you have to deal with the people in your community, right? So if you want to have that solution to be able to go in and take it to the next step, trading is about apprenticeship and mentorship, just like it was in the old days before there were universities. You guys follow me there? Best way to level up as a trader is to get under the wing of a true master trader, a true professional. Now, side note, can you guys truly see the difference between my results and their results? When I say their results, we'll just keep it as their, whoever the others are. Give me a Y if you can attest to that, right? So it's no question the difference that I'm a professional and I know what I'm doing. You don't know what you don't know. Now that you guys can see what actual professional trading is and how institutions trade, you're able to hold these people accountable. Now it's up to you to latch on. I got my subscribers that tap in, and they are tapped in, and they'll probably be tapped in for life. Just like some of the guys you see, my Robs and Mikes and Joes and Leos, the ones that are in the group, right? They're tapped in and they'll be tapped in for life, because this will change your life. You stay tapped in with me after about, let's say, 3 months, you really won't even need me, because you'll be able to go in, open up that account, and make it happen, right? I personally, I can say that the only downside to the way I teach is I don't have residual income forever, because eventually you guys don't need me. I've taught over 7,000 people. And the only thing I regret about that is that those 7,000 people, they aren't dependent on me. But guess what I don't regret about it? That those 7,000 people aren't dependent on me, right? I'm happy that you guys are independent, right? Although I wish I could have that money coming in forever. But truly, when you figure this out and I show you how to do it, you don't need nobody. So stop falling for the hype and respect this money. Respect it, and it will respect you. That makes sense? You put in the time, and the results will come. Stop making excuses that those that are getting money off of Forex instead of in Forex are feeding you. I will say it again. Stop accepting the excuses that those that are getting paid off of Forex instead of in Forex are feeding you. Because none of that stuff is sustainable. But guess what is sustainable? The markets. Forex will be here for a long time. And if it's not, then the whole world has something to worry about. But companies like US Steel, they're gone. Fannie Mae has had trouble. Freddie Mac has had trouble. Indy Mac had trouble. All the Macs had trouble. AIG had trouble. Right? I can keep going down the list. Even US government has had trouble from a company standpoint. So for those of you that are just sitting there getting comfortable and building your nest egg on quicksand, you better think twice about that. Because there is an alpha and then there's an omega. And if you're not prepared for that omega, then the downfall will be mega. Now fire flames you feel them dropping again. I've been in business for years. And the one thing that I've literally decided to just be done with is gimmicks and get rich quick anything. Okay? I just had a daughter. Okay? And I also have other sons. That means I got kids. And I'm past gimmicks. That means I don't want it if it's a one-off payment. Okay? I'm not saying I'm not trying to get paid. I'm not saying I don't want money and I don't want to get paid one time. But I ain't trying to spend too much energy on this one-off hustle thing. Quick little hustle, a quick little pop, a quick little get-rich scheme, and then I'm done and I'm off to the next. All that stuff ruins your reputation. And if it's the wrong left and it's the wrong things, you may land in jail. Could mess your credit up. Or, I mean, all kind of that gimmick stuff. We all come from the hood or an impoverished neighborhood, right? Or the urban community. We know about all them gimmicks. This is not one. Don't let them turn Forex into a gimmick for you. I did not learn from IML. I did not learn from anybody inside of IML. I learned from a person who worked inside of an exchange. I learned from a person who had their own hedge fund and their own prop desk. These are professional trading houses. I didn't learn from somebody who was just educating people and signing people up to recruit. That's gimmicky as hell. Wake up, please. Who has been online and has seen the way that the outside trading community talks about, let's just say IML flat out. How do they talk about IML outside of the IML community, the trading community? I mean, outside the pyramid scheme aspect though. Outside the pyramid scheme aspect. Forget about the MLM aspect. How do traders talk about the IML community? They talk about it like it's a joke. No, forget the negative. They talk about it like it is a joke. They laugh. Because professional traders, when they see what you guys literally accept and put up with, they're baffled. They're baffled. I came back to help and saw an opportunity. I was like, man, this is a joke. Ooh, let's clean it up. Let me come in here and see if I can clean some stuff up. Chris Terry was like, nah, I'm good. Ferraris, houses, Bentleys, roses, I'm good. I don't want to change nothing. I was like, oh, okay. Well, shoot. All right, good. And I'll just pick up what's falling off the side then. Right? So if there's people making $100,000 a month, $25K a month, $10K a month, and you see that there's money to be made, take responsibility and build your downline and help your downline and nurture your downline and learn your product because it helps your bottom line, right? Learn the industry. There is no shortcut. The only shortcut will cost you your reputation and your integrity. While Chris Terry's laughing all the way to the bank. While the Chairman 500s are laughing all the way to the bank. That's how these pyramid schemes are all set up. Now I'm gonna put it into perspective. The whole stock market is a pyramid scheme, right? It's just a legal one. But Chris Terry was smart enough to set the company up so that it can survive because you have to have actually more customers than IBOs. You have to. It's structured that way. You can't have a bunch of IBOs over customers, but more people inside the whole group focus on the recruiting aspect. A lot of the people that put themselves out to be these masters, right? A lot of people that put themselves out to be these masters, they are making money off their recruiting. And if they were making money off trading, just like you've seen in my chat, everybody would be celebrating profit. Am I lying or am I telling the truth? For those that are new to the group, you see we're making all these profits, right? And you see, you're like, okay, well, hey, what's going on? I mean, how am I not making money? What's going on? It's a big difference between playing around in this thing and really, really getting busy. Laughing when you guys are taking 7 trades and you're celebrating 20 pips. That is a joke. You're bringing liquidity to the market for big traders like myself and institutions. It is a joke. And you call that professional trading? And you're getting that from a mentor? Everybody's all celebrating and cheering? That's not professional trading. It's a waste of your time. Write this in your trading plan. Being flat is a position too. And sometimes being flat is the best position that you can have. When you're flat, you still got a position, you're holding the US dollar. Give me a 7 if you follow me. You're still holding the US dollar, right? I didn't jump in and out the market this week, but we still made profit because we know when to be trading and when to step back. And we know where to put our focus because we're alert traders. And that's what alert trading is all about. Being alert and aware of what's going on in your surroundings and the news and all opportunities, and we use and set alerts, baby. There's a big difference between us and them. We really trade over here. It's TTPT, trade today, get paid today. And that's the motto. You know what I mean? So I want everybody to win. I've had months where I withdrew over $500,000 in the market. And this is years back, years running. That means Chairman 500 is not enough for me because I can't depend on Chris Terry to pay me $500,000 a month and then tell me that I can be clipped or I'm not doing something right, so I'm no longer there. Or I don't get my full GV until I get to Chairman 1 million, so I'm missing out on money. That don't work for me. It doesn't work too well for me. But the market don't discriminate. You hit that 500,000, and you want to withdraw that 500,000, that's your money. You withdraw when you want to. You withdraw how much you want to. You ain't waiting on Friday for a skrill, for the skrill. Drop fire flames you for the game. You're not waiting on Friday for a skrill for the skrill. You're your own boss. You withdraw when you want to. I got a call from several of the heads at Trade House, upper heads. You know, what group are you in? Who's your chairman? I'm like, what you talking about? I ain't in no group. I got my own little group. I do my own thing. I'm in my own lane. There ain't no chairman. I'm my own chairman. Guess what they say after that? Crickets. Because they can't stop me. You can't come do nothing to me. You can't go run to Chris Terry and tell on me. You can't go run to Spiller and have him clip me from his group. You can't go run to Young Trilly and have them clip me from their group or exclude me from what they're doing because I'm not a part of that. I don't want to be. I have learned a skill that nobody can take from me. And I'm blunt and brash, aren't I? I don't hold my tongue for nobody. Why? Because you can't do anything about it when you're in this market. No one can stop you. No one can do anything about it because no one knows when you're in the market and when you're on the other side of their trade. You control it. Loose cannon. That's true financial freedom. So stop trying to get paid off of Forex and get paid in Forex. This makes sense, guys? You want to get to those big withdrawals and you want to make big money, then make sure you respect this side just like you respect that side. Because it will change your life. A lot of you look just like I do. A lot of you look just like I do. You're a minority. You can't walk in there and go get that job and get that raise and that promotion. Hell, a lot of you can't get to that Ivy League school and make it through and still get that damn job you hope to get. The main way you can make it to the top where sky's the limit and there's no cap on what you can make and your potential and your age, your race, creed, and walk of life don't matter is the markets. Right? There was never a time when man was not. That makes sense? So it's our time to rise back above. So if you want to take back what they stole from you in slavery, you take it back one trade at a time. They can't stop you. They can't see you coming more. Give them more. It's how you feed the babies. You show them financial literacy. You take that 225 from the babies, you take that 164 without feeding the babies, then you're further perpetuating this slavery, right? This iron hand of oppression and that foot on our necks. We don't have too much unity right now. So the only way we can unite and fight is being all on the same page and on one accord. And we move on the S&P at the same time from major dime. We move on gold, right? We move on gold at the same time on one accord. And we're all in the same movement as the banks. They can't cut the Forex market off, because if they did, they would cut off international trade. And all of us are being robbed over a long period of time due to inflation. So this is your way to hedge the loss you're taking on your spot position on the dollar. It's your opportunity to go in and short bonds when they're tanking. It's your opportunity to go in and take advantage of the stock market when you feel it's going to collapse, and it's that ultimate collapse. There's so much opportunity out there. Don't be capped by one company. I had some of my friends that grew up and they were selling drugs. One of my friends made a lot of money selling marijuana. I moved him into buying weed penny stocks and buying weed stocks. I explained to him that the market is set up to where you don't have to buy the inventory and hold it and store it anywhere. You don't have to go call people up and find buyers. Every day there's liquidity. Every day there's buyers and sellers that come together to meet. All you got to do is just tap in. You make that money. He said, well, hell, how do you make money? I mean, I see you got in gold. You got in gold at 1406 and it popped to like 1450. You're like, Reg, that ain't that much money. I said, well, what about if you're holding, 100 of them? 100 packs of this, or 100 ounces of gold. He said, that's a lot of money. I said, well, yeah, in your world it is, but in my world we have leverage. We only put down a small amount of margin, and I can control a large amount, and I can rip lots of money out in short amount of time just off my computer. Give me a one if you follow me there. Talked to one of my students years ago, used to sell sneakers on eBay. He's like, man, sometimes it's slow. I don't have buyers. And sometimes I can't find the shoes. Gosh, Reg, but it makes me money. Trading is slow. I'm making money, but I'm not making much. I said, man, don't be focusing on the profit in dollars. Focus on the percentages. You're selling shoes and you got to do all that work. But why don't you buy Nike stock or Reebok stock or Under Armour? And you can go in and have endless amount of shoes to buy and endless people that want to buy them from you at whatever price you want to sell them at, right? Transition's key. So it's a mindset thing. And this is where knowledge is truly power, right? I'm gonna open it up for AMA before I go. Any questions for me? So I wanted to make this like mini mindset session, right? Mini mindset. There's much to really go through. I'll quickly go through our G7 currencies before I go and give you bias for the week. All right. Good. Let's do G7 bias for the week real quick, and then I'm gonna let you guys go. All right. G7 bias means top 7 currencies. And let's go. Euro USD. Let's start at 1255 and see how quick and long it takes us. Weekly. Trend, downtrend. All right. So your bias should be down overall for Euro US dollar. Okay. Going to pound US dollar. Pound US dollar. Your bias should be down overall for the pound US dollar, but write down that it's kind of extended. All right, it's extended. So if you end up getting a, let's say a bottoming tail next week or anything like that, it could give you, a good possible turnaround, but nonetheless, it's still bearish. AUD, USD. Bearish. It's a downtrend, pretty nice, strong downtrend, but we do have a bottoming tail. So it's kind of neutral. You would say neutral for the week going into next week, because even though it's in a downtrend, you're a little bit away from your moving averages. And if we get a pullback after this bottoming tail, right, then price action could end up being bullish next week. So that's neutral. New Zealand, US dollar. It is range bound. The reason I say that is because this year has been kind of range bound, but we got a lower high here and a lower low. So now it's officially, now you could say it's officially in a downtrend. All right. I would be very careful and cautious as to going long right here. You could be short. So overall, our bias is down on that one. For the USD CHF, our bias is going to be bullish because this is inverse to the Euro US dollar. So you can automatically say your bias is bullish on dollar Swissy. Hold on one second here. Actually, no. Higher time frame. Casualty is a little bit off on this one. Hold on. All right. Yeah, so your bias is bullish because you're at the bottom of the range here. Okay. If you look at this particular range and the fact that you're inside a little bit of a bid block, I would be a little bit bullish on this, but neutral to bullish, mainly because you have bearish candles, very, very big bearish candlesticks. The things that are giving it a lot of life from the bulls is this bid block down here, all right? So we'd be more bullish than anything, also because the Euro US dollar is bearish. So we were right there. USD JPY. Bearish. With us watching our level down here at 104.60, all right? 104.60, very important level, all right? I would wait for a little bit of pullbacks in there, but as strong as the momentum is, you could take this down to the downside as we are bearish on dollar yen. Dollar CAD as the last, and then we're out. Sideways, all right? I would really do nothing with this one right now because it's kind of in the middle of its sideways range and it's neutral. So I'm done. 4 minutes. How you like that, guys? 4 minutes, we were able to get through weekly analysis on our G7 currencies. Drop fire flame if you felt that game. And I really hope you wrote that down. Really hope you wrote it down, all right? I want you to use that bias going into next week, okay? And I also want to teach you to be alert and be able to quickly be able to spot trend and move on. Because if you can spot trend fast, you can set the alert. When the alert triggers, you go look at see if the trend's right on your weekly or daily, and boom, if everything's good, you go and you set that trade. No reason to be too indecisive. It either is uptrend, either is downtrend, or sideways. There's nothing else. Right? All right. You really already know who it is. It's Mr. Wall Street coming at you live, doing it big with that pip talk. You know that pip talk, that good old talk you love. Until next time, peace.